We can go back 6,000 years and see the performance of gold during crisis. We can't go back 10 years and see the performance of cryptos during crisis.
Hey friends, this interview is brought to you by our patrons and in part by Virtual Shield VPN. Protect your information, location, and search history from Big Brother and big data internet providers without slowing your internet speed. And check out IdentiSafe, a new groundbreaking feature that includes a microphone and webcam blocker that also automatically deletes browser history, cookies, and can even shred files so they're unrecoverable. And use the link below to take an extra 20% off your first term. So this Christmas, visit Virtual Shield to purchase a gift card for friends, family, or get it for yourself. And give the gift of internet security. Just click the link below. And now, our friend Lynette Zang. Hey friends, thanks so much for tuning in. You know how much we appreciate it. I have back on the line the Chief Market Strategist from ITM Trading, our friend Lynette Zang, and I'm so eager to speak with her again. Lynette, how are you?
I'm excellent, and it's great to be here today, Sean. It's really nice.
It's terrific to have you back. You've become so popular in the space because you're a straight shooter, you're level-headed, and you know what? You're not afraid to speak up and give us your thoughts on cryptos, because the whole world right now is moving to cryptos. And I just want to point out something to you that I think you'll appreciate. I know my audience knows this. You know how the crypto gang likes to use the word or the term FUD, fear, uncertainty,
Yes.
and doubt, against anybody who ever speaks out and says, hey, you know what, maybe Bitcoin isn't a panacea. Maybe it won't save us. And by the way, you know that I own some Bitcoin, and I have some Bitcoin cash from that spinoff. I've got some cryptos. I've advised my audience over the past year to dip a foot into the pool, right? Because there's some good ones out there. So I'm sort of playing both sides of the fence here, but one thing I haven't done and I won't do is I won't sell any of my physical silver and I won't sell any of my physical gold. And now we're seeing some folks in the space, people that I've interviewed over the years, selling all their silver or advising against buying gold. And so I think that the ultimate FUD, fear, uncertainty, and doubt, is coming from some of these former silver and gold bulls who no longer believe in silver and gold. Your thoughts?
I would absolutely agree with that. And, you know, I noticed something really interesting the other day, and that is I had done a little piece on Bitcoin versus gold, and I'm going to be doing some things. But look at this volume. This is the Bitcoin chart. What they're doing is they're being blinded by numbers, and numbers are just numbers. But look at this volume chart on Bitcoin, and it's kind of small, and I'll send you the links. But this is like 2015 to early 2017, where you really had massive volume, though the price of Bitcoin was pretty low. And then this looks an awful lot like this linear graph on when all of the banks and the bigger companies and corporations, including DTC, who is the legal registered owner of all of those fiat products, started to get involved in Bitcoin. And not just Bitcoin, but the blockchain technology and all of the cryptos. So the biggest challenge that I have, and with those that are declaring FUD, is they're saying that it's outside of the system and everything. And I'm reading right now a report from the IMF on the advantages of taxation in a completely digital world, where they're talking about having the ability to look at your whole lifetime of earnings, spendings, wealth accumulation, and how easy it is to do that with this blockchain technology, so that they can really do a nice wealth transfer from one group to another easily and create all these complicated tax structures on this blockchain. They haven't said anything about smart contracts yet. I'm not done reading it. But, you know, it's not outside of the system. It is the system. And while you'll see Bitcoin or any of the cryptos making new highs, etc., that's to get you in it. It's got to crash, because that's the way they conclude the transition. So I agree with you, although I don't personally own any, and I don't plan on owning any yet. I think there's some fiat that you could make in it, but you have to also be willing to liquidate it and convert it into real money. And it's been around since 2009. None of this has been tested inside of the system. It's all a huge experiment.
Well, I think your perspective is very interesting. And I know, I'm going to get some thumbs down immediately from the Bitcoin proselytizers who don't want people to have these conversations because they say we don't understand it. Do some research is what I keep hearing from some of my friends even in the space that are Bitcoin proselytizers. And again, I own some Bitcoin. I think you should own a little bit of everything in these times of uncertainty because, hey, I'm all for getting more fiat as quickly as I can get it so I can buy more physical silver and gold. But what I don't understand is jumping solely on the crypto bandwagon and turning your back on your former principles. Silver and gold in physical form are real money. And now I'm hearing some of these same friends of mine in the space say, well, that's not going to be true anymore. We're in a crypto world, and silver and gold will never be money again. And I don't think that is true. I really, truly don't. Look at the way silver and gold are treated around the world by other cultures. It most definitely is money to most of the people on the planet.
Exactly, including the central bankers, including the 1%ers. So what is it that they might have the ability to know that you don't know? Because we can go back 6,000 years and see the performance of gold during crisis. We can't go back 10 years and see the performance of cryptos during crisis because they're not real. So, I mean, it kind of makes me question where people were really coming from in their conviction. Because if this is about money, if it's about a money standard shift, every single time people say, this time it's different. And frankly, it never is different. Yes, the technology is more advanced. And yes, there are some advantages to the normal person with this. But there's huge advantages to the corporations. They're not spending all that time and those billions and trillions of dollars on developing all of these blockchain technologies to support their goals. And the smart contracts, really, have they read a smart contract? And you brought something else up, is that they say you don't understand. Well, in the beginning of my quest in this, right, I didn't understand. But I read about it daily. I read from all different areas, not just one little narrow supporting crypto areas, but I want to know what the IMF and the central bankers have in mind for us, because they're not going to give up their power easily. And they've had a money monopoly forever. And so what I think that those that are declaring FUD is that they don't understand and they are not paying attention to exactly what these central bankers have in mind. And what I'm showing you now is called a money flower from the Bank for International Settlements report on central bank cryptocurrencies. And, they love it. But the interesting thing about it is they have coins, they have gold outside of the system, completely decentralized as part of this. Everything else, all these other cryptocurrencies, whether they're central bank cryptocurrencies or private cryptocurrencies, they've got some space in there for them as well. But those still all tie into the central banks. The only thing that is outside of the way they've tied it in is gold.
Yeah.
Gee, isn't that interesting?
Yeah, you make a great point. If you buy a gold coin at a coin show, it is the most decentralized thing you can buy because there doesn't have to be a receipt in that transaction. If you buy, look, here's the thing. I'm going to tell you what these bankers have planned for us in a second, and you know what's coming. But I want to amend what I said in my last statement there about precious metals is certainly money to everybody else on the planet. I mean that culturally speaking. If you look at India, the history of China, you look what's going on in Russia with the central banks hoarding gold. But literally, if you look at the people of India, they treat gold as money. They give it as gifts at weddings, etc. It's culturally speaking money. around the planet.
And
Certainly.
they keep it close.
Yeah, and they keep it close. That's right. They wear it. That's right. Like your lovely gold bracelet there. So here's what I wanted to share with you guys. What's coming is more and more clearly evident by the day. Here's an article from Zero Hedge, which Mike Maloney just commented on, and we're going to play a soundbite from Mike here in a second. It's this: ECB, European Central Bank, proposes end to deposit protection. I'll give you the first line. Maloney will give you the second. It says this: it is the opinion of the European Central Bank that the deposit protection scheme is no longer necessary. Okay, that doesn't sound good. Quote, covered deposits and claims under investor compensation schemes should be replaced by limited discretionary exemptions to be granted by the competent authority in order to retain a degree of flexibility. Okay, that begs the question, flexibility for who? Certainly not you, the depositor. And here's where Mike picks it up.
Now, the paragraph here, though, that really does bother me is, during a transitional period, depositors should have access to an appropriate amount of their covered deposits to cover the cost of living, their cost of living, within 5 working days of a request.
That's priceless, is it not, Lynette? I mean, is that not priceless? Look, I own some cryptos. I own some Bitcoin. It'll be a great hedge, right? That's all it is to me, is a hedge against a cataclysm. It's a way to diversify. But look, most of the people on this planet, with only 21 million Bitcoins that will ever be made, will never own even a fraction of a Bitcoin. Bitcoin is not going to save humanity. And we can see what these banks are going to do to depositors. They're going to take it, and they're going to take it all.
Exactly. Well, you know, the interesting thing is the bank, after they did the bail-in in Cyprus in 2013, where they were testing the parameters, and you might recall that at first they were just bailing everybody in, whether or not there was the deposit insurance scheme, because that's what it is. It's a scheme. And there was such a global outcry because at first they were just taking everything. And then they said, oh, no, deposit insurance. And so they backed off of that, and they allowed 100,000 euros that they didn't officially take. But the reason why you hear hesitancy is because that was 2013. Those people had no free access to their accounts until 2015. But they were able to get, I think, something like 60 euros a day. In Greece, the same thing is true. That they did that bail-in and the bank closures in June of 2015. And they still don't have full access, but they've gotten a whole lot smaller and smaller. And what I'm reading right now in the current IMF report on digitization of all assets and incomes, I mean, this is for governments. This is about taxation, and they're going to look at taxing you over the course of your lifetime, not just yearly. And they don't like the fact that, hey, if you have a good year this year, but you know you're going to have a bad year next year, maybe you move some of those gains or incomes into next year. Once we go fully digital without cash, they talk about without cash, then, you know, it's easy. They'll know every single thing that you spend. Does your spending match your income? It's not about criminals. You and I are the criminals. It's about their ability to tax us even easier, which is why we went off the gold standard to begin with.
That's right. Yeah, no, that's 100% right. And, you know, the thing that really gets me about this whole fear, uncertainty, and doubt as it relates to former silver and gold bulls in our space regarding silver and gold is that the principles that we've been touting are 5,000-year-old principles. And they're historical principles of the founding of our nation, going back to real physical metal as our money, going back to gold and silver certificates. And so for these friends of mine some of which are current friends, some of which are former friends, to turn their back on those principles is really astounding to me. And it reminds me of the internet bubble, the NASDAQ bubble, moving into the year 2000, when everybody said there will be no crash, this is the new. And there was a
Right.
horrific crash over the next 2-3 years. But of course, now that bubble is reinflated. And not only is that bubble reinflated, it's bigger than it ever was. And now we have this crypto explosion. And by the way, I want to say one more nice thing about cryptos. I love the idea. I love the free market that it's created for upstarts, great people with great ideas, to move into this space and come up with some category killers, come up with some new ideas. My friend Steve St. Angelo has the CDX ad network, which I think will be great for those of us in the truth space. There's lots of great ideas, and I love the free market that cryptos is providing, but I just don't think that Bitcoin specifically is a panacea for humanity, and that we should all embrace Bitcoin and turn our backs on the history of physical precious metal, silver and gold, as money, because it's the only thing that will be decentralized enough to save humanity, and yet the people I respect the most in the space are turning their backs on it. It's just, I'm sorry, it's just astounding to me, and I just want to say it publicly. I'm astounded by that.
Right. But understand that, you know, this perception management, which is a huge key in central banks and governments, that's what's really happened to them. They're blinded by the numbers, but I'm wondering who really even owns Bitcoin anyway, or or any of the other 2,500 cryptos, because I'm thinking that it's these guys. I'm thinking that it's the banks. I'm thinking that it's DTCC and Chase and those guys. So how is that really beneficial to the little guys? And what are they converting their Bitcoins into? So, I mean, it really is just a tool and a mechanism that they have fallen prey to. And I'm not saying anything bad about that, because this is how they do a shift, is that they allow people or groups of people to make more money. And then they're lulled into that false sense of security. It's what they did in 1913. They lull them into this false sense of security so they don't push back on it. And here's the reality. My daddy used to say all the time, and I loved him, so I don't want anybody to get me wrong on this. That's his picture back there. Great man. But he always said to me, do what I say and not what I do. And I used to say to him, Daddy, that doesn't make sense to me. It doesn't make sense to me. But that was like our standard kind of banter. And so I applied it in my life when I heard me saying wonderful things to my daughters, but then actually not living my words. It's a function of how deep is and I'm not putting anybody down by this, but how deep is your integrity? Because you can say anything you want. Well, what would you do if it were me? Well, then I can say anything that I want. It is, what do you do? What do the smartest guys in the room do for themselves? They buy physical gold and silver. Central banks have been accumulating it like crazy. In China, especially, Russia, India, they've been accumulating gold in their reserves. We don't even know how much gold China has, but we know that the power is shifting from the West to the East. So from the US to China. Canada, they sold all their gold. Really? Okay. Germany just got their gold back. Why? If it doesn't matter, why are they accumulating?
Yeah. I just want to say this too as it pertains to cryptos. And what I'm trying to do here a little bit is I want to play devil's advocate.
Okay.
Well, not against you. I want to play devil's advocate against the Bitcoin proselytizers, just simply because, look, if you didn't take my advice just over a year ago when Bitcoin was back between 400 and 600, 700, and I said, just buy a couple, because this thing may go back and revisit its all-time high of 2,000. And boy, wouldn't you like to have a couple if that happens? And here we are sitting at over 8,000, with some predictions saying this thing is going to go to Well, Cliff High says it's going to 12,800 by February. Nobody thought that could be possible. That was his WebBot prediction, and it sure looks possible now. 12,800 by February of 2018. And then I've seen predictions of 100,000 and even as high as 1 million per Bitcoin. Could it go there? Sure. In an environment as crazy as this one with all the fiat flying around the planet, absolutely it could. But I want to give you sort of the depths of that kind of research. This is a great example of how ridiculous that research is. I don't know who Standpoint Research is, but they've just raised their Bitcoin target to 14,000. Okay, great. Let's see the quantifiables of how they justify that. And they write this. The analyst. Just weeks after raising his price target for Bitcoin from 7,500 to 11,000, Standpoint Research analyst Ronnie Mose has raised his target once again to 14,000. Mose has also set a long-term target of 60,000 for 2022. Now get this. This is the thesis. Just listen to this thesis and tell me if it couldn't.
Okay.
Tell me this couldn't apply to gold and silver. More countries are embracing cryptocurrencies and removing barriers that kept investors away. That's true, he said in a note.
Yeah.
But Mouse is not trying to be a hero by keeping his target the highest on the street. The target is based on the concept that with $200 trillion in the world, in cash, stocks, bonds, and gold, there are a few reasonably valued investment options. And he says this, if half of 1% of the $200 trillion is put into Bitcoin, it would result in a $1 trillion valuation. Well, yeah, of course, but what is that not true for? And I don't know that people are going to want to look, here's the point about me being sort of playing the devil's advocate about this whole thing. The folks that didn't jump in at 400 to 600 when they could have scrounged up enough cash to buy one or two, they can't buy it now at 8,500. 63% of the people in the United States can't come up with $500 in an emergency event in cash to pay for that emergency event.
Well, you actually brought up a really interesting point, and it's something that I'd like to just kind of direct you to, because originally Bitcoin was sold as being outside of the system and an alternative to fiat money. Okay, well, how are you going to use Bitcoin as an alternative to fiat money when you can't tell what the price is going to be from one day to the next, right? I mean, if you're a retailer and you accept Bitcoin, hey, it might plunge 25% overnight, or it might shoot up 25% overnight. So either way, it's not even marginally stable. So is it really a dollar alternative? I'm thinking not.
Yeah, well, the other thing I just want to say, we can move off this. I didn't mean for this to be a Bitcoin bashing hour at all, because again, I hold Bitcoin. I hope it goes to 100,000 per coin.
Look, I can see it's not really so much Bitcoin. It's that blockchain technology. And there are some really good, and peer-to-peer, there are some good things about it. But there are also some dangerous things about it. And it's not really money. Right now, it's hugely speculative. They're taking a hands-off. The government and everybody are pretty much taking a hands-off approach to it because it benefits them in that money flower and having everybody digital. It's got to rise. And by the way, the stock market could go to 50,000 too. But none of it is real. And that's just numbers, and people get blinded by numbers, but there needs to be some utility in all of that, or what's its real value.
Yeah, and there's Bitcoin, there's utility in Bitcoin, and there's utility in a lot of these altcoins. And, again, I own some, but here's what I just want to say about the decentralization. Most of the people that have bought Bitcoin have done so through accounts set up at places like Coinbase. Have you seen how many new accounts have been opened up at Coinbase? I think they opened up like 1 million new accounts like a month ago or something. Do you think for a second the IRS can't figure out and can't get the information of the people that opened those accounts? There's no decentralization in the sense that, I bought a Bitcoin and I made $1 million and then I sold it and it's all tax-free. Hello? It's not decentralized to the degree that the government doesn't know.
Honestly, that's what that whole IMF report is using this for taxation, but not just because you sold the Bitcoin. It's called lifetime taxation. It's easy on this blockchain for them to accumulate every single transaction you've ever done, every single thing that any of your earnings, any of your capital gains, any of your, if all titles are held, and we should talk a little bit about AC Chain, but if all titles are held on blockchain, then they know everything, and it's easy to tax you because it's in their power to do so. It's in their power just to take it. You're going to hold it all in a digital wallet offline. Okay, then you can never come online with it. So for governments, this is a great way for them to tax. For central bankers, they say this in like everything that I ever read is once it's all digital, there are no limitations to how low we can go. But since things like Bitcoin or any of those cryptos are infinitely divisible, just like we didn't understand inflation, we don't understand Bitcoin. If only those at the highest level of engineering can actually understand Bitcoin, but they can't explain it to us, they just say you don't understand, well then explain it to me. And I have yet for one person to come forward with any other cryptocurrency, any of them, and there's over 2,500 that are tied to the SDR. Not one. So they can say, I don't understand it. Well, then tell me how I don't understand it. And please, please show me one other cryptocurrency that when it's married to Bitcoin or Ethereum or anything else becomes an SDR. And, and it's in this flower. It's in the flower. This is from the Bank for International Settlements. I think they have a lot more power than you and I do.
Yeah.
Or any of the guys in the crypto space.
Yeah, that's right. Well, it's the bank that sits atop all banks. The BIS sits atop the IMF and the World Bank, and then the central banks below them, all of which are Rothschild. But here's one thing I do want to say that I love about Bitcoin or any of the altcoins. I love this. This is the one ultimate thing where it takes the cake. If you had to get out of this country, and my wife and I were talking about doing just that if the witch got into the White House, because I think things were going to only get far worse, far faster with Hillary Clinton in the White House. By some miracle, she didn't. It's hard to leave the country with, several hundred pounds of silver. But you can leave the country by turning that silver into Bitcoin, getting to wherever you want to go, and on the other side, you still have your Bitcoin wallet. It's much easier to get out of the country with a Bitcoin wallet with all your money in it than it is to try to transport silver and gold anywhere out of this country. You know as well as I do, you can't even go through an airport with more than $10,000 in cash without declaring it, without getting searched, without having it seized. So just in fairness, I wanted to say that.
They address that in this piece. So they've been changing the laws that if you don't declare it, they can confiscate it and throw you in jail and all sorts of things. But you have to also keep in mind that there are new international banking laws that have been put in place over the years on reportability. So it's still a function of, can you use it when you get to wherever you're going to go? Not if they have their way. Because wherever it is that you'd move, as soon as you attempted to use it or you put that wallet back online, it would be traceable.
Yeah, well, okay, it doesn't surprise me to hear you say that. It makes perfect sense. They get you coming and going, right? Just like the IRS.
They do. But on the other side of that, if you have a high quality numismatic coin, and you can hold a lot of wealth. There's a variety of values in terms of dollars to these. You can, because it is a private and personal collection. So, you got a couple $1 million. Now, I'm not suggesting that somebody goes and puts $2 million in a coin. Don't get me wrong. But these coins go for the hundreds of thousands and millions of dollars. That's where they start. They're going straight up. So if they ask for a private audience, and this is simply, one little coin, it's your private collection.
You bring up something really interesting about the value of those coins. I didn't know that they're going up that fast, straight up, and they're in the millions of dollars.
In this area.
Yeah, no. But I just want to make a point about this idea that we are seeing hyperinflation of the U.S. dollar in very tangible ways. That's one. The other is in Bitcoin. And the third is in the art market. Have you seen this recent news of a $450 million Van Gogh painting selling? That's insane.
Yes.
$500 million for a painting? How is that not hyperinflation?
Well, it is hyperinflation, and oh, by the way, since you're bringing up hyperinflation, although there are three legs to a dynastic wealth stool, and remember, dynastic wealth is wealth that lasts in families at least 300 years, and that is real estate, rare collectibles, so that goes into what you were just talking about, and gold. And arguably, it's the gold that enables you to maintain and accumulate those other two legs. So that's why I'm accumulating a lot of gold now. But when you're talking about hyperinflation, and supposedly in October, the Federal Reserve said that they were not going to be reinvesting dividends and interest from the treasury bonds, from the mortgage-backed securities. And I pulled this the other day because I was doing some research on something. And guess what? Since July, and they made that announcement in September, and it was supposed to go into effect in October, they have almost doubled the mortgage-backed security purchases. This is not runoff. They were just simply reinvesting dividends and interest, so it's kind of flat. This is a hyperinflationary pattern. Okay, so I listen to what they say, but I look at what they do, and this to me is not a good pattern. It's straight up again. And they've almost doubled just since July, just over the last few months. So first of all, they are not taking that liquidity punch bowl away, but this talks about the real estate market. So this is a pattern shift, and I have lately noticed several pattern shifts because everybody wants to know when. Now, I'm not saying that it's now, but I can tell you this is one of the pattern shifts, and this would pertain to real estate. You have the junk bond market that is imploding, okay? And look at this, this is volume. I don't know if you can see this, but I'll send you the links.
Yeah, it looks good.
The volume increases, people were buying, and this happens to be a high yield ETF. And okay, it makes sense, the price is going up. But here it started to decline in 2016. The price keeps going up, and now this is just a short-term image of this big one. And look at this. This looks pretty nasty. So there is a shift that is occurring in the bond market at the lowest quality level, but we also have a flattening yield curve in the highest quality level, which means that the short-term rates are, what's happening is actually the short-term rates are moving up. The long-term rates are staying the same. When those short-term rates go above the longer-term rates, that's an inverted yield curve, and that typically indicates a recession, and that happened in China. I think it was May. It might have been April, May, June, something like that. But that inverted yield curve happened in China just recently. So even in what's considered the safest area of the markets, the government debt markets, and by the way, a bond is a debt instrument. And I know that kind of seems basic, but I was talking to somebody the other day and they didn't realize that. So I want to bring it up. Whenever you hear the term bond, bill, note, no, they're referring to debt. Okay, so there's something happening there. And then I saw this. I do insider trading every week. And let me explain this to you, because this is really the first shift that I saw. Okay, now the Wall Street Journal tracks 10 different sectors in the market. And they track how much the insiders, and the insiders, by the way, are CEOs, CFOs, boards of directors. So the guys at the top of these corporations, they know what's going on better than anybody else. And they track how much they're buying. So maybe they're executing a warrant or something like that, but how much they're buying and how much they're selling. 10 sectors. Now, so there's two shifts that I noticed here. First of all, the end of September, all of a sudden, not all 10 sectors sold, but not all 10 sectors bought. In fact, only 6 bought. And I thought, oh, okay, well, my database isn't as deep as I usually like it because we only started tracking it once I started doing the insider trading, and Wall Street Journal says they don't have that back data. Right. Okay, whatever. So, okay, my data pool isn't as deep as I typically like it. But I can tell you that as long as we've been tracking it, this is the first time that I saw that not all 10 sectors bought. And that has been consistent. I'll do another one tomorrow. And so I don't know, maybe it'll change tomorrow. But that has been consistent every single week where I'm seeing all 10 sectors are selling, but not all 10 sectors are buying. That's a pattern shift. And the other part of that is this is for every $1 worth of buying back in, this goes back to August, there was about $30 worth of selling, which is a lot. And you can see how that's just been a nice steady uphill until you get here, which was just before earnings season. And then it was like a huge spike up. So for every $1 in buying, there was like $210 worth of selling. Then a huge drop down. Well, that would make some sense. They front loaded it there, but then another huge spike. So this pattern is also shifting, and it could indicate that the insiders are getting frenetic about their selling. I mean, we can see that they've been selling more than they've been buying for a long time. I mean, I've been tracking that for a long time, and it's just been consistent, steady uphill, so they don't want you to see it. Now, all of a sudden, we have all this volatility in there.
Yeah, let me ask you this now. As a former, I wasn't much of a trader. I wasn't very good at it. But as somebody who was passionate about following stocks, it was a red flag when insiders were selling. It was a big red flag. So why is it because the market is so broken now and the central banks are in there buying up this garbage? Is that why the market is still going higher? Because in any other normally functioning market, when insiders are selling 200 to 1 or even 30 to 1, it's a red flag. When the insiders know it's time to get out, that's usually when the institutional investors get out. They know it's time to get out. It's always the retail investors are the last to know. Yep, the retail investors are left holding the bag. But the market keeps going up.
Well, there are lots of different tools that they can use. Number one, there's also been a tremendous amount of corporate stock buybacks, right? So they know that their insiders are liquidating, so they're going in and they're buying it back, because what you're seeing is even in the individual stocks, the stock is going up on declining volume and the insiders are getting out in droves. So they can use the derivatives market, the futures market, to also mask that and control the markets in general and the individual stocks. So between the share buybacks from the corporations and the futures contracts that are used to mask this, the individual wouldn't see it unless they look at volume, which, let's see, I just had a volume one here. Did I turn it over? Yeah. Okay. Okay. So you can use this for that, right? In a normal market, in which you have more people participating and buying and the share price goes up, well, that makes sense. That's what it's supposed to do. Greater demand, price goes up. But here, and actually, I'm going to show you that on the Bitcoin as well. I'm telling you, there's something fishy is going on. Because all of a sudden here, you can see the decline in volume. This goes back, what did I go back here, to 2016. So it's about a year or so where you can see this is, you've got declining volume, but the price on it still goes up. How does that happen? Right? So there's derivatives. I mean, an ETF is a derivative, and then you have derivatives on top of derivatives on top of derivatives. And those are so much cheaper than buying an index or buying a stock outright that they use. But you always know when you see declining volume on increased price, that indicates some form of manipulation. And since we're right, and since we're talking about volume, I don't know, Megan, maybe you can you see this area in here? Well, okay. So look at all of this volume and look at the price. And I'm not saying the volume, well, look, this volume is much greater than this volume, period. Okay. And yet you've got the Bitcoin making new highs.
Yeah, and meanwhile, the CME group is foaming at the mouth to roll out. Duffy's foaming at the mouth to roll out the new Bitcoin futures ability to short Bitcoin on December 2nd. Now, Cliff High's data says, and he told me personally, they screw the pooch on this one, he said, quote, and it's not going to work. They're not going to be able to bring Bitcoin down. I'm very dubious because the CME has destroyed fair market value of silver and gold through the futures markets. It's where they manipulate it. So I think that may be what's coming for Bitcoin, although Cliff's data says no. And again, all credit to Cliff. He's been right. From day one, if you guys had taken Cliff's advice when he started talking about Bitcoin, you'd be very, very wealthy now. And he's been saying for a long time it's going to be 12,800 by February. I have no reason to doubt him at this point. But again, in the interest of having a real conversation about all of these FUD issues, whether it's FUD on the Bitcoin side or FUD on the silver and gold side, it warrants discussion because these are big, big, big issues. And Lynette's 100% right. The world is run by debt and derivatives and criminality, frankly. And if you go back to that, what'd you call that, an IMF cloud or flower? What was that where they showed gold outside?
This is the BIS. This is the money flower.
The money flower. Gold is outside of the system.
Yep.
I think that's a great place to round out the conversation. And I know just a bit ago you brought up AC chain, which is the ultimate trigger for some of our friends in the crypto side. So I don't know if you want to go there now or if we should save that for another day.
Well, really what it basically is there are other cryptocurrencies that are attempting to do something similar to AC chain, and it was really more like I brought it up because nobody has ever brought any other cryptocurrencies that turn into an SDR. And even some of them are designed to hold fiat instruments like your stocks and your bonds and those kinds of things. I'm not saying that this does not exist yet, but I haven't seen any of the other coins or haven't found any other coins that actually hold the title on a coin that turns into an SDR. And so when we go back to this money flower, because the IMF in here is actually talking about issuing SDR retail coins for you and me. Now, there's one other thing, since you brought up the CME group, Interactive Brokers just sent a letter talking about how they would want the Bitcoin derivatives to be in a completely separate, held in a separate clearinghouse, because an implosion in the Bitcoin would create contagion and everything else. That very well may be what the powers that be want and need. Because remember, they need a really big crisis to make this transition. Have you heard that? Have you read that letter from the CME, from the Interactive Brokers yet?
No, I haven't, but it's very, very interesting. And again, I'm very, very dubious of anything Terry Duffy and the CME group is up to in regards to Bitcoin futures. Because why would we need Bitcoin futures? Bitcoin should be bought and held in your wallet, period. And there should be a free market between buys and sells. That's it. We don't need Bitcoin futures. Okay, we're not farming here. We're not trying to hedge soybean production.
Well, okay, so that gives the legitimate use for futures and for derivatives. But that has been turned into speculative use after 97 when we hit that peak debt area. So, yeah, we needed to legitimize it. That's why. That's why they want to do it. It legitimizes it. But, it also creates a whole lot of risk, and people are not aware of it.
Well, guys, I really do appreciate you taking the time. Those of you that are still with us here after 45 plus minutes here of
Sorry.
very interesting banter. No, I love it. And I think it's a conversation we'll have to pick up again in another month or so, Lynette. And, I appreciate your voice on this stuff because you've taken a lot of heat for talking about all of this stuff. But you don't take heat for talking about silver and gold, and you shouldn't either, because I'm going to continue to advocate for physical silver and physical gold as an instrument of wealth protection outside of the system. When you hold it, you really do own it. And that's something you can do with physical silver and gold. Can you tell people how to contact you guys?
Absolutely. Well, you can always give us a call, and we all pay attention to all this stuff, and that number is 888-696-4653. And of course, we have oh my gosh, my mind just went blank, but itmtrading.com and our YouTube channel. But yeah, and we hope everybody has a very safe and healthy Thanksgiving coming up, and I appreciate being on here. Yeah, I'd like to pick this up later.
Yeah, okay. Well, amen to the happy Thanksgiving wishes, and I wish the same to all of you. And my thanks to Lynette for joining us here. ITM Trading, itmtrading.com, and the ITM Trading YouTube channel is a must-watch. Lynette does great work. The whole team there does, yeah. And thank you so much, guys, for your support at SGT Report. A special thanks to my patrons over at patreon.com. You people are really incredible human beings. We love all of you. So thanks so much for giving us a lifeline in this stormy sea. And thank you so much for your support at thephaser.com and thelibertymill.com, all of which amount to real news 24/7. We wish you all a happy Thanksgiving. God bless.
Be safe. Bye-bye.
Be safe. Bye-bye.
There's, I believe so far this year, there have been over 1,500 arrests related to pedophilia. And you don't see that in the news.